Welcome back to Talk Stocks with me, where we turn market noise into clear signals. Before diving into today's technical analysis segment as well as the market recap, let's quickly set the scene with a rundown of the key macro and market events from July 14 to 20th, 2025, that means this past week, that shaped investor sentiment. We begin with escalating tariff threats from US President. President Trump issued a new 30% tariff on EU and Mexican imports, even floating the idea of 100% tariff on Russia. Despite initial market hesitation, the US equities shrugged it off. The S&P, the Nasdaq, and the Russell 2000 hit or stayed near record highs. June CPI inflation report. The June US Consumer Price Index showed inflation rising from 2.4% to 2.7% year over year, with core CPI up to 2.9%. Markets reacted swiftly, stocks pulled back, and the dollar strengthened as traders scaled back anticipation for Fed rate cuts. The June Producer Price Index. The June PPI came in flat at 0.0% month over month, yet goods rose 0.3%, reflecting tariff inflation pressure while service prices eased. This mixed data offered cautious optimism that core inflation was manageable, but still underscored persistent cost pressures. On the 17th of July, we got the US June retail sales. The retail sales rose 0.6% in June, reversing two prior monthly declines, with core retail sales up 0.5%. This indicated resilient consumer demand despite tariff pressures and renewed investor confidence. The strong retail data reinforced the view that rate cuts should be delayed, pushing treasury yields up, following a rally in sectors like consumer discretionary and retail. This development shaped trader sentiment and price action. Inflation surprises stalled the rally and cooled rate cut expectations. Tariff-driven cost signals on producer prices added complexity to the inflation picture. Trade warnings tested the market nerves, but strong earnings and economic fundamentals kept momentum going. Strong retail sales data hinted at continued consumer resilience. All these events created concurrent or cross currents in the market. Some sectors surged while others lagged. And that brings us to the two we're diving into today: Mansfield relative strength. In environments like this, where leadership changes rapidly and macro headlines dominate the narrative, we need a way to objectively identify the true market leaders. Mansfield RS, which is relative strength, isn't just another indicator. It helps pinpoint the stocks and ETFs outperforming the broad market, giving us a clear picture of where smart money is flowing. Welcome to today's technical analysis segment titled Trade the Leaders. And we're going to be using the Mansfield relative strength to find market winners. Now, what if I told you there's a simple way to spot the strongest stocks before they make their biggest move? That's exactly what Mansfield relative strength helps you do. It's not about guessing, it's about data, leadership, and timing. Now, what is the Mansfield relative strength indicator, you might ask? Well, the Mansfield relative strength indicator is a modified version of the traditional relative strength indicator. Now, instead of comparing a stock or an ETF to its own history, we're going to be comparing it to the performance of a stock to a benchmark index. So, for instance, you're going to be comparing stocks in Nigeria to the All Share Index, or perhaps the NGX 30, or you're going to be comparing stocks or ETFs in the US market to the S&P 500 or the Nasdaq or the Dow Jones Industrial Average. And this plot is going to be exhibited on TradingView in a smart, normalized way. And this is what you can see here on the right. You're going to have a zero line and you're going to have the RS line, which is called the relative strength line. You can either trend upwards or downwards. This is what the curve is actually going to look like. It's not going to be smooth. But what you are looking for is the trend. Do I have an uptrend? Do I have a downtrend? Is the RS line above the zero line or below the zero line? Now, what makes it powerful is that it shows you whether the stock you are holding or you're trading is outperforming or underperforming the broader market. And in trading, that matters because leaders always lead. Now, let me break down exactly how I use this indicator. First of all, you choose your benchmark, meaning, are you trading the Nigerian market? Then you can choose the ASI or the NGX 30. Are you trading the US market? Then you can choose the SPY, which is the S&P 500. Are you trading the Australian market? Then you can use the ASX 200 for the Australian market. Now, once you display it on TradingView charting interface, you read the zero line. When the Mansfield RS line, which is a relative straight line, is above zero, the stock is outperforming. Below zero, underperforming. Now, watch the slope also. A rising Mansfield relative strength line means momentum is building. Even if price is still consolidating, that's your edge. Also, look for divergence. Sometimes the RS starts rising before price breaks out. That's when smart money is accumulating. Now, what it tells you in general, what do I get from using this tool? The goal isn't just to buy strong stocks. The goal is to buy strong stocks or ETFs that are getting stronger relative to the market. That's how I stay in sync with where capital is flowing. With Mansfield RS, you are not just buying breakouts, you are buying leadership. Now, my approach is where I combine the Mansfield RS with sector rotation. If the technology sector is outperforming and semiconductors have rising RS, I drill down to the top X names in that group using this indicator. Now, what is my call to action? If you're tired of buying lagging stocks, I want to stack the odds in your favor. Start using the Mansfield relative strength. It's not magic, it's math, and it works. Subscribe if you want more strategy breakdowns like this. Drop a comment below and tell me, have you used the RS before, or will this be your first time? Please let me know. Now let's bring the theory to life. I'll walk you through some examples using TradingView on how I use the Mansfield relative strength indicator to trade stocks in the Nigerian market as well as the US market. So let's get straight into it. Join me here on the charting interface of TradingView. This is my layout for trading or analyzing Nigerian stocks. Towards the left is the monthly time frame and the right is the weekly time frame. The monthly time frame is my swing structure and the weekly time frame is where it's my internal structure, is where I place my entry. Now, straight away, what I want you to focus on here is the indicator at the bottom pane here. This right here is the relative strength indicator. This is the Mansfield relative strength indicator. You can see it has a zero line here and it has the upper quadrant and the lower quadrant. Typically, when a stock is trading above the zero line in the upper quadrant, you see that stock is showing superior strength versus the benchmark. If it's below zero, it is underperforming the benchmark. Secondly, you want to see the trend of the RS line. Is it upward sloping? That is a stock that is showing great momentum. If it's downward sloping, then it shows a stock that is losing momentum. Now, the reason we can see here that you have no RS line, it's actually there. It's actually on zero. And this is because, and it's the white line here, it's because you are comparing this index to itself. So it has to be zero, right? There's no superior strength against itself. That's why it's zero. So now we're going to look at 3 stocks in the Nigerian market. We'll also switch to the US market later and pick 2 stocks. So the first stock I want us to look at is Nigerian breweries in the Nigerian market. Let's look at Nigerian breweries. So now remember, my benchmark that I've chosen is the ASI. You can choose your benchmark. It can be the NGX 30, it can be the NGX insurance, whatever you want your benchmark to be. I've gone with the benchmark of ASI. Now, clearly, I wouldn't explain anything about this chart. I'll just go straight here to the RSI plot. The Mansfield relative strength plot. You can clearly see that the RS line is above the zero. That is strength. You can also see the slope is upward, showing you strong strength. So again, this is telling you that this stock is showing superior strength versus the ASI. It's a strong performer. Let's look at another stock here, BUA Cement. Let's look at BUA Cement. Again, this is BUA Cement. You can clearly see for a long time it was underperforming the market. It was below the RS line, and you can see here that there was a change. There was a reversal here, and now you can see that it's trending up and it's about to cross the zero line. This is actually a bullish move when it crosses across the zero line into the positive quadrant. This is showing you that this stock is showing momentum, strong momentum versus the benchmark. Now let's look at an example of a stock that is underperforming the benchmark. Let's look at Owando. So now we're going to look at Owando stock again, just to see how the Mansfield relative strength indicator would provide insight. You can clearly see here this strong showed strength here, huge strength versus the ASI. But when it got over here, you could see that instead of losing momentum, and eventually went below the zero line. But the good thing is that it didn't go far into the zero line, into the negative quadrant. It was hugging close to the zero line. And what we need to do is just to keep an eye on it to see when this trend turns positive and back to the positive quadrant, meaning above the zero line. So this is an example of how you use this in the Nigerian market to see that the stock you want to trade is outperforming the market. So now let's switch gears a little bit to the US market to see how this tool can also be used. Now let's start with by looking at Nvidia Corporation, which is one of the biggest AI companies in the US or even in the world in general. Now, in the case for the US market, I have switched my benchmark from the ASI to the S&P 500. Remember, you can change your benchmark. You can choose the Nasdaq, you can choose the Dow Jones Industrial Average, you can have whatever benchmark. I'm going with the S&P 500. And now this chart, this is the, so for the US market, I have the weekly time frame here. Okay, but here is monthly, but typically I use the weekly, so let me just move that to weekly. Yes, and you have the daily time frame here. So this is showing you how your stock is performing against the benchmark, which is the S&P 500. Clearly, you can see Nvidia has been trading above the zero line, which shows strength. So it basically means this stock is, outperforming the market. You can see this period the stock was underperforming the market. You can actually also see it using the price action, but it's showing you also in the relative trend. Another stock I would like us to look at quickly is Oracle. Let's see how Oracle is performing. Again, this is Oracle here. We can see the chart, we can see the price action, and we can see the relative strength index. You can see that the RS line is above the zero line, which is in a positive quadrant, which shows strength. And also you can pick that the trend here is upwards. Yeah, it's not sloping downwards. Although recently it's kind of consolidated, it's kind of trading sideways, but in general this is showing some strength because you can see it's above the zero line. Another great stock that I'd like us to quickly look at is Palantir to see how it's interacting with the benchmark S&P 500 using this indicator. Again, you can clearly see here that in general this stock has shown strength in general. You can see most times it's trading above the zero line and in the upper quadrant. Currently the slope, it looks to be upward. So this tells you this is a strong stock that's outperforming the market. So you please tell me, have you used this indicator before? Would you start using it? Please let me know in the comment section, and let's see how this can help you up your game as a trader. Thank you. See you in the next chapter. Before we wrap up this week's market digest, let's review this past week's market performance and affect the presence of a bullish or bearish trend or a neutral sentiment. This week, the US large cap stock tracked by the ETF VOO delivered a performance of 0.71%. Year to date, VOO has delivered positive 7.07%. The short-term trend on the daily time frame is bullish, while the mid-term trend established from the weekly chart is neutral. Moving on to the Nasdaq, represented by the ETF QQQ, this week posted a change of 1.31%, bringing its year-to-date performance to 9.79%. The short-term trend established from the daily time frame is bullish, and the mid-term trend found from the weekly chart is neutral. US small cap stocks evaluated by the performance of the ETF VTWO this week posted a move of positive 0.46%. Year-to-date, VTWO has delivered a return of 0.59%. The short-term trend observed from the daily time frame is neutral, and the mid-term trend from the weekly chart is neutral. Canadian equities tracked by the ETF VCN printed a weekly change of 1.01%. Year-to-date, VCN has delivered a return of 10.51%. The short-term trend on the daily time frame is bullish, while the mid-term trend established from the weekly chart is neutral. Switching to the Nigerian market, tracked by the index ASI, which is the all-share index, week-to-date change was 4.31%. Year-to-date, ASI has delivered a whopping 27.84%. The short-term trend on the daily chart is bullish, and the mid-term trend on the weekly chart is also bullish. Oil commodity tracked by the ETF USO this week posted a change of negative 1.73%. Year-to-date, oil prices have delivered a return of 0.50%. The short-term trend on the daily time frame is neutral, while the mid-term trend on the weekly chart is neutral. Finally, Bitcoin, tracked by the ETF GBTC, this week delivered negative 3.61%. Year-to-date, Bitcoin has posted a performance of 24.78%. The short-term trend on the daily time frame is neutral, and the mid-term trend on the weekly chart is neutral. Let's give it out to the Nigerian market. It's the number one leader in terms of year-to-date performance from the index that I track or that I report weekly. It's even outperforming Bitcoin. This is a very huge and praiseworthy accomplishment. As we wrap up, the market landscape is aligning with a wave of growing optimism. US large cap and tech-heavy Nasdaq continue to show strength in both short and mid-term trends, while small caps are beginning to awaken. Canada and Nigeria are also flashing bullish signals across time frames, highlighting global opportunities. Even with oil and Bitcoin showing mixed short-term signal, there is an undercurrent of momentum building. This is a moment to stay focused, stay selective, and stay prepared, because across asset classes and borders, the setup for wealth creation is forming. Let's position wisely, follow the trends, and ride the wave of strength where it's emerging. As always, stay nimble, stay informed, and let price confirm the story before you act. Thanks for tuning in. If you found this helpful, drop a like, hit the subscribe button, and share your market views in the comments. I'll see you in the next one. Till then, bye.